Hello, I'm Asif Farouk of Finextra and we're here at the EBADay Business Forum sponsored by ACI. Kevin, today's discussion was really quite wide-ranging. Started off talking about real-time settlement, going on to the consumer side, mobile wallets, and also finishing up with identity. But what I'd like to know from you is this discussion around real-time. We're seeing a lot of talk in Europe, America, Australia, but I'd like to know how that kind of meets with intraday liquidity management and how it could potentially affect that. So.
Yeah, it's quite interesting because what you're seeing is with the UK continuing to develop its system, you've got Australia a little bit further forward than perhaps Europe and the US in terms of defining its proposition. And there's quite a challenge around when settlement takes place for the real-time payments. There's a discussion, I know, in Europe where people are separating out settlement from the arrival of the information and the guarantee. I think that the challenge really is that when you look at the larger systems and the challenges perhaps the UK's got, which gets reflected into some of the other central banks, is around the historic nature of the settlement processes. And of course, the longer you leave the gap between settlement and the actual value given to the customer, you start creating risk and cost. Not often that cost is properly passed on to the consumer or to the business. But the risk is there. And I think the big challenge that will come out over the next 3 or 4 years is how you tie the two together. I know the Australian system is looking very much at settling as it goes through on a 24/7 basis. That clearly removes the cost of collateral or pre-funding and also minimises the risk. And I think particularly the UK and Europe and the US need to think about a similar approach. I think separate from that is the ongoing regulatory piece around intraday liquidity, which is still a challenge. And this is around reporting and banks reporting of their intraday liquidity. And I think that's something that's been developing over the last 2 or 3 years. And I think very much that is founded in the message systems that the banks use and how that gets reported. And I think that will develop in the background. But fundamentally, for the discussion that we've had today, the real challenge is around the settlement process sitting alongside the arrival of the payment with whether it's the consumer or the business and how that operates.
So we also saw kind of a differing in definitions about what real-time actually means from the bank's perspective, from a vendor's perspective, from the payment processor. So I'd like to ask you, are there any potential dangers in having these different definitions?
There is, and I think some of them have come out of very genuine discussions around how their different countries' systems operate. Clearly, when you've got a system that you're comfortable with, and you can develop that in a way that you think is right, you can articulate that in a way that makes it feel like it's real time. We heard some good examples today where via book entries, effectively the value was being created real time. But of course that creates risk. The more operational and systemic processes you put in place to achieve that. And I think one of the big discussions will be around. And this is really for Europe particularly, but paralleled in the US, is so what type of payments are need to go through this real-time payment system? And I think there's a general view that real-time payments are for retail customers, small payments, etc., etc. But what we've seen in the UK is they're being used for salaries, they're being used for trade payments. So I think you've got to take the view that once you've built the real-time payment rails, a whole set of payments will go down there of differing sizes and for different uses. And I think that's really the challenge in terms of people thinking about the proposition.
Paul, I'll begin by asking you what were some of the major discussion points then today at today's breakfast?
I think some of the major discussion points were really around faster payments. Is that real-time payments? Is that really real-time payments, or is that slow but faster than we've already got? And is it real in terms of settlement as well? And I think generally we came to the conclusion that we should get to real time, and it should be settlement as well. The other piece that came out about was, what is the business model of a bank? If the digital identity and the digital payment comes to the fore, what does that mean to the business model of the bank? The other point was then about if I take the digital identity and I put the customer right front and center, or the middle of the bank, that would be a good thing. And all of this is on the journey of becoming a digital bank. So it was kind of a lively debate, many areas to go through. We had all the major banks here, a couple of the challenger banks, and a retail here as well. Very interesting group.
Okay. It's interesting you speak about digital banking, because as we know, ISO 20022 isn't involved in the faster payment scheme. So do you think that will affect faster payments' ability to play with digital banking, or to come into the fore with digital banking in the future?
Look, I think that the faster payments guys were talking about that, and they have some points right now that the current standards that they're using allow the customer to know exactly when the payment's going to come across. But I think we all believe that it needs to go down the XML route, and ISO 20022 is the nearest proxy that we have for that, and I think we all believe that's the direction it's got to go to, which is a technology that can learn as it goes along, and it can be adapted, rather than a standard that was done really for cards, frankly, some time ago.